It's here. 7 big changes to Social Security in 2023. Now, this came out a couple months ago, but it covers in detail things that are taking place right now in the month of January. So if you collect any of these fixed income benefits from the government, whether it's SSI, SSDI, retirement, any of these, you're going to want to watch this video all the way through because chances are many of these 7, they're going to be applying directly to you. And also, stick around till the end because we've also gotten word, breaking news, that the IRS has announced there's going to be millions of people that are going to be getting a $1,200 check. That is right. So stick around to the end for more information on that. But with that being said, let's dive into this article, let you know about 7 big changes that are hitting right now in 2023 for Social Security. Now, before we do me a quick favor, smash the like button. Just takes a second, helps me out a ton with the YouTube algorithm. Thank you so much. And also, if you want to stay up to date, it's totally free. Why not come join the Ram fam? All you got to do is very quickly hit the subscribe button, turn on that notification bell. And with that being said, let's go ahead and dive right in. All right, so let's get right to it. And as always, this article is linked in the description below if you'd like to read it for yourself. I cite all the sources, put them on the screen, and read right from them so you can see that it's the latest. And it says 7 changes to Social Security taking place in 2023. Now, skipping down to number 1, beneficiaries will receive their largest raise in 41 years. And as you know, it's that 8.7% COLA increase. There's little question that the most important change announced this week is the cost of living adjustment for COLA in 2023. Social Security's COLA is the mechanism designed to adjust benefits to match the prevailing inflation rate as determined by the CPI, or Consumer Price Index, for urban wage earners or clerical workers, known as CPIW. And as I've let you know here on the channel several times, they want to change this to CPIE, so it directly addresses the needs of the elderly. Now, come January, Social Security's nearly 66 million beneficiaries will receive a whopping 8.7% raise. And as you guys know, it's January now. This is taking effect. You'll note raise in quotations marked to reflect that the benefit increase is to match inflation and isn't the same as a pay raise that you'd receive from an employer, which could potentially help you get ahead of the prevailing inflation rates. And they're saying that last year, that 5.9% increase, it actually fell short every single month. So beneficiaries, it was almost like they were getting less money due to inflation. Now, on a percentage basis, the 8.7% COLA is the biggest year-over-year increase in 41 years and the 4th largest since the CPIW became the program's inflationary tether in 1975. Now, in nominal dollar terms, it'll be the biggest increase in history. The average retired worker is estimated to see their monthly benefits climb by $146 in 2023 to approximately $1,827. But before breaking out the champagne, consider the sizable portion of this COLA is being gobbled up by the historically high inflation. Additionally, the purchasing power of Social Security dollars has declined by an unsightly 40% since 2000. In other words, Social Security's cost of living adjustment isn't all it's cracked up to be. And in addition to that, we've also heard that they're going to be decreasing other benefits as well, offsetting the COLA increase. So you got to watch out for that. We're hearing that other things are being taken away as this one is being increased, but this is just to keep up with inflation. Number 2, high-earning workers will have to open their wallets a bit wider. It's not just beneficiaries who are impacted by Social Security's annual changes. High-earning workers are going to be on the line for more taxable income in 2023. This year, Social Security's 12.4% payroll tax on earned income, wages and salaries, but not investment income, was applicable between 1 cent and $147,000. The self-employed pay the entirety of this 12.4% payroll tax up to $147,000, while workers employed by a company split this tax liability down the middle with their employer. The payroll tax provides Social Security with the lion's share of its revenue. Now, the maximum taxable earning income cap was $147,000, and it adjusts lockstep with the national average wage index most years, with workers enjoying substantial wage pricing power. The maximum taxable earnings cap will rise from $147,000 in 2022 up to $160,200 in 2023. So more of your income is going to be taxed. For the 6% of workers who bring home more than $147,000 in earned income annually, this change could translate into as much as $1,636.80 in added payroll tax liability next year. Number 3, the rich are getting richer thanks to the beefier maximum payout. However, it's not all bad news being a higher earner. Next year, the maximum monthly payout at full retirement age, the age where eligible beneficiaries qualify for 100% of their retirement benefit, is rocketing higher. Following a $197 per month increase in 2022, the $3,345 lifetime high earners will see the maximum benefit at full retirement age jump from $282 per month to $3,627. For those of you keeping score at home, that's over $43,500 per year. But in order to receive the maximum monthly payout from Social Security, 3 criteria need to be met. A worker would need to do the following: wait until their full retirement age before taking the benefits, work at least 35 years, since the Social Security Administration takes into account a worker's 35 highest earning inflation-adjusted years when calculating their monthly retirement benefits, and hit or surpass the maximum taxable earnings cap in all 35 years considered by the Social Security Administration. Only 2% of workers end up qualifying for the maximum monthly payout at full retirement age. Number 4, withholding thresholds for early filers are increasing. Social Security is a program that incentivizes patience. Retirees who begin receiving their benefits prior to reaching the full retirement age at 62 and 66 are hit with a number of penalties. As an example, monthly payouts are permanently reduced for early filers. Additionally, beneficiaries can be exposed to the retirement earnings test, which allows the Social Security Administration to withhold some or all of recipients' payouts if they earn above the preset income thresholds. For instance, early filers who won't hit their full retirement age this year can have $1 in benefits withheld for every $2 in earned income above $19,560 or $1,630 per month. For early filers who will hit their full retirement age in 2022, $1 in benefits can be withheld for every $3 in earned income above $51,960 or $4,330 per month. In 2023, these income thresholds are increasing, which means early filers can pocket more earned income without having some or all of their benefits withheld. Early filers who wouldn't reach full retirement age can earn $21,240 or $1,770 per month next year without any withholdings kicking in. Meanwhile, early filers who will reach their full retirement age can net up to $56,520 or $4,710 per month before any withholdings begin. The retirement earnings test is no longer applicable once a beneficiary reaches their full retirement age. Number 5, disability income thresholds are climbing. So for those of you on SSDI, the second week of October is also historically good news for the disability workers and their families who rely on monthly payments from the program. As of September, roughly 8.95 million people were receiving the disability benefits, 7.7 million of which were disabled workers. In 2022, non-blind disabled workers were allowed to bring in $1,350 in earned income without having their benefits stopped. But when the curtain opens on 2023, these same folks will be able to generate $1,470 per month in earned income before their benefits would cease. That's up to an extra $1,440 in annual income. The earnings threshold is moving up sizably for blind disabled workers too. This year, the monthly earnings cap before benefits cease is $2,260 per month, and in 2023, it'll rise to $2,460 per month for those on SSDI. Number 6, the bar to qualify for Social Security benefits is moving up. Something you might not realize about Social Security is that you're not automatically entitled to a benefit just because you're an American citizen. To receive a retirement benefit, as well as survivor and disability coverage, you'll have to earn work credits. A total of 40 lifetime work credits is needed to receive Social Security benefits, of which a maximum of 4 can be earned annually. While this might sound like a lot of work, pardon the pun, it really isn't. In 2022, a work credit was granted for each $1,510 in earned income. Thus, a worker who generates $6,040 in earned income will receive the maximum of 4 lifetime credits this year. This relatively low bar to qualify for benefits will be moving a bit higher in the upcoming year. In 2023, it will take $1,640 in earnings to equate to a quarter of coverage, according to the Social Security fact sheet. To be awarded the full complement of 4 lifetime work credits, you'll need to earn $6,560 next year. Number 7, retirees are likely to see their tax liability swell. The last big Social Security change isn't something you'll find on the recently released fact sheet, but it is nevertheless pertinent to a growing number of retirees. Back in 1983, with Social Security asset reserves running on fumes, Congress passed and then President Ronald Reagan signed into law the last major overhaul of Social Security. The Social Security amendments of 1983 gradually increased the payroll tax and full retirement age, as well as introduced the taxation of benefits. Up to 50% of Social Security income became taxable when a worker's modified adjusted gross income, or MAGI, plus one half of their benefits surpassed $25,000 or $32,000 for a couple filing jointly. In 1993, the Clinton administration added a second taxation tier. This new tier allows up to 85% of Social Security benefits to be taxed at the federal rate if the MAGI plus one half of benefit formula tops $34,000 for a single filer or $44,000 for a couple filing jointly. Here's the catch. These income thresholds have never been adjusted for inflation. As cost of living adjustments, or COLA, have naturally increased monthly payouts over time, more and more retirees are being exposed to federal taxation on their benefits, with a historic 8.7% COLA on the way in 2023. It's only logical to expect tax liabilities of a lot of Social Security beneficiaries to swell. And we've covered this before, and they've said it, that they're adjusting the COLA increase but not the tax brackets, and they need to do so. Otherwise, a lot of Social Security recipients, they're going to get hit unexpectedly with taxes they didn't see coming. So these are taking effect right now in 2023. Now also, there's going to be a lot of changes with Social Security. We're hearing they're going to be addressing a lot of issues. There's not a whole lot of time to reform the entire system before the solvency runs dry. So I will keep you up to date on that. And also, as I mentioned, breaking news coming out that the IRS has announced they're going to be sending out $1,232 checks to 12 million Americans across the nation for about $14 billion of funds going out. And I address all the details in this video right here. So like I said, this just came out a couple days ago. This is breaking news from the IRS. Check it out next if you missed it. And with that being said, thank you so much for joining me. I'll catch you in the next one. Take care. God bless. This is Steve.